Welcome back to New Money. We're discussing how to prepare for your provisional tax payments. My guest, Werner Vos, if you'd like to send an email, or you can send an inquiry of info@bhca.co.za. Werner, let's just finish with just a few things. Is there a threshold where someone has to become a tax practitioner?
Become a tax practitioner or a
a provisional taxpayer. Sorry, Werner. I was just testing you to see if you were with us or not.
Excellent. Thank you, Bryan. As far as a provisional taxpayer is concerned, or whether you qualify to be a provisional taxpayer, there's certain thresholds that you need to exceed. So, for example, if you earn income, but your income is below the tax-paying threshold, there's no need to file provisional returns in that case, because there's no need to make for provision for taxes. There's no tax liability. The other instances which happens more often is when you have salaried employees where their income is taxed at source by the employers, but they earn additional investment income. For example, interest, dividends, rental income. Now, the provisional tax conditions in that regard states that if your taxable income is in excess of 30,000 Rand from that source, then you have to register for provisional tax. So if I can use an example, if you're below the age of 65, your interest exemption is 23,800. So if you add your 23,800 to the 30,000 Rand threshold, it's 53,800. So you only have to register for provisional tax if you're under the age of 65 and your interest income exceeds 53,800.
Okay. And then, Werner, last question that's very important. If you SARS disallow expenses, do they have to give you reasons?
Absolutely. And in fact, the e-filing system has a button or in the e-filing menu where you can request SARS for reasons for when an assessment was raised and the reasons why that assessment was raised.
Well, it just sounds as if SARS is operating as one of the few government operations that is on the ball. But let's get some emails. Philip in Parkwood said, please explain the difference between cash accounting and accrual. And if one is outstanding debtors, do you have to pay tax even though you've not received the funds?
Absolutely. Cash accounting is very straightforward, as the name suggests. You've received the money or the money has been paid into your bank account, and therefore you only pay tax on income actually received. Accrual accounting is a bit more difficult because that's when you raise an invoice on a customer, and if, for example, the customer does not pay that invoice, you will end up paying tax on that invoice without having received the cash to pay the tax on that transaction. And then you'll have to go back to SARS, and if you don't, and if it becomes bad, you then have to claim a bad debt against it. So it's, from a cash flow point of view, quite punitive.
So where companies are giving credit and having to pay tax, it's quite onerous, huh? They've really, they've got to have their credit control. Then Julie in Lyndhurst, she says, she gives me a section. I'm not going to comment about the section, but she asks, is it correct that the conduit principle has now fallen away?
Okay, so she's referring to Section 25B of the Income Tax Act, and no, it hasn't. There's just a minor difference between situations where the taxpayer is a resident and the taxpayer is a non-resident, or the beneficiary is a resident and the beneficiary is a non-resident. So where the beneficiary is a resident from a South African trust, all the income, capital gains that is distributed by the trustees after having passed a resolution is distributed to that South African beneficiary. That South African beneficiary will pay tax on those gains at their personal marginal tax rates.
Which is a big difference.
But that principle does not apply to non-residents. So if you have a South African trust where the beneficiary is a non-resident, you don't have the opportunity to attribute to that non-resident. Therefore, the tax gets trapped in the trust, and it's quite punitive. because capital gains for a trust is 36% and income tax is 45%.
Okay, so one's got to understand that. And then Tony in Durban says, I was transferred by my company and spent 4 years in the UK. I can continue to contribute to the pension fund. I'm retiring in 3 years. Will there be an exemption in terms of both the lump sum and tax when I retire from that period away?
Well, the first question I need to ask is, I assume that you will retire as a South African tax resident. In other words,
I think we must assume that.
Yes. In that particular case, he will retire as a South African tax resident, and therefore he will have all the same benefits to which any other South African would have been applicable.
So he won't get, because I thought there was some benefit and acceptance that when you lived overseas and paid to pensions, then that won't be included in your South African tax return. Okay, so I understand now. If he was contributing to his South African pension fund, that would be treated the same. But if he was contributing to an international pension fund and not on his South African pension fund, would that be different?
Yes, absolutely. Remember, in that first example, although he spent 4 years out of the country, he continuously contributed to the same South African retirement fund, and leaving the South African retirement fund, he is entitled to the same benefits as any other South African. Obviously, that is South African retirement funds. International or non-South African funds is treated totally different. And remember, in those particular cases, we have double taxation treaties that may find application as to avoid paying double tax on the same receipt.
Okay. Barry in Randburg says, last year I was the victim of a major fraud involving the purchase of immovable property. Attorneys requested I make payment, but their communication was intercepted and the bank account details were fraudulently changed. I transferred the funds, and by the time the fraud was discovered, the money had already disappeared. Can this loss be declared as a capital loss to offset against any capital gains tax?
Well, your knee-jerk reaction would be yes, of course, there could be a capital loss. However, a bank account is not an asset for capital gains tax purposes. Now, this can become quite technical. So I don't really want to go into it, but the simple answer is, once you've instructed the bank to settle the amount and the bank has extinguished that obligation, then you effectively obtain in exchange proceeds that's equal to a delictual claim against the fraudster. Now, a debt is a capital gains tax asset, and if it becomes irrevocable, then that loss would be entitled, he would be entitled to utilize that loss against other capital gains in his tax return.
Robert in Waverley says, in this assessment, do I have to include any capital gains made, or we've dealt with that? You said, or can I leave it to carry over? I think that particular email we've dealt with earlier on. So let's have a look at Ricky in Santon. He says, what is the interest and penalties for underestimating my income and late payments?
Yes, we touched on that. This is very important. As mentioned earlier, there's no penalties or underestimation of the half-year estimate, but there is an underestimation penalty on the full-year estimate. And effectively, it's a 20% penalty on the shortfall. So if you should have paid 100 Rand and you only paid 50 Rand, then effectively you pay a 20% penalty on the short payment. That is what we call the underestimation penalty. Then there is a late payment penalty. So, for example, if you've established that you need to make a provisional payment and you make that payment, for example, this month after the 29th of August, with the 31st being on a weekend, you will then be imposed a 10% penalty for late payments. So people have to be very aware of that. If they were to make payments over that weekend, those payments will only have been received by SARS on Monday, Tuesday, being the next working days. And in those cases, that will attract a 10% late payment penalty as well. So taxpayers have to be aware of the fact that our deadline for the month of August is over a weekend. And then the last point is interest. Yes, there's interest on late payment of provisional tax, and it's charged currently at a rate of 11%. but it's come down to 10.75 from the 1st of September because of a reduction in the repo rate.
Okay, let me just make a comment to viewers. Please, yeah, you're going to be waiting on your accountants, but I suggest if you haven't heard from your accountants by the end of this week, you contact your accountant just to find out what's happening. You know, it is a two-way street. Rodney in Ilova says, and I want us to please deal with this. We're relocating to the UK later this year, and I've received conflicting about whether I should apply for non-residency with SARS. What are the advantages and disadvantages of becoming a non-resident for tax purposes? I will continue to earn income in South Africa through an investment property that generates rental income, and also plan to retire from my investment son, so I will have ongoing retirement income from South Africa. What steps should I take going forward in terms of my tax obligations?
This is a very interesting question, Brian. Breaking residency is not something that you can dictate to. It's where you sit in South Africa and you decide you don't want to be a tax resident any longer. It's a factual inquiry. So if you leave the country...
Werner, I'm going to ask you a favor because we're coming to the end of the program. Can I ask you next Monday just to come onto the program just for 3 or 4 minutes just to deal with that, because that is a hot potato. So many people are asking about it, and I don't want to delay that. So if you don't mind, to Rodney, I'm going to come back on Werner will spend a few minutes next week. Thanks, Werner, I really appreciate it. No one particular enjoys paying tax. However, if you are under the age of 65 and earn more than 95,750 annually, you're required to submit a tax return. If you're between 65 and 75, 148,217, and for individuals over 75, it's 165,789. In addition to this, you're also required to file a return if you realize the capital gain exceeding 40,000, earn foreign income when converted to rands at 250,000, receive commission or other forms of income, earn rental income, receive investment returns. This obligation applies even if you were auto-assessed. If your assessment is incorrect, it remains your responsibility to correct it. Failure to do so may result in overpaying tax or incurring penalties. With everything now computerized, SARS is in a much stronger position to detect discrepancy. Werner, thank you for joining me this evening. It's always important to note that our program is to provide information and should not be construed as advice. Next week's program, we'll be dealing with short-term insurance, but I will be asking Werner to spend 5 minutes with us. And if you need to get hold of me, my details will appear on the screen. Thank you for watching, and good night.